Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Together in this webinar, live webinar, we're going to take a look at the Forex market and at some live charts like the euro dollar. First of all, be aware that this is a webinar, a live webinar that is that is viewable by a global audience, but may not be attended for everyone or suitable for everyone. So to find out more about that and conditions and details, visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets are considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Alrighty, so today's focus is on Forex strategy. If by any chance you are new to webinars with me or Admiral Markets, let me know, and that will be useful. Otherwise, there's a couple at least, or a group of traders that are here more frequently, so they are more aware of things that are done. But if you're new, let me know. Today we're going to focus on how to use strategy on lower time frames, in fact, using range bars and not candlesticks this time. I use candlesticks, as you know, often, but that will be the strategy of today. But before I start looking at this strategy, I still want to do kind of more, let's say, medium-term analysis, kind of continue what we were looking at yesterday, see what today could give, and then I will look at strategy. So anyone who's specifically here for strategy, I ask you to have a bit of patience. I don't know exactly, 30 minutes patience or something like that, or 20 minutes, 15 minutes. We'll just look at technicals, do some discretionary analysis on some pairs, and then I want to show you this particular strategy. Okay, so that will be the sequence. Alrighty. This is my wave analysis of today, and it's showing that price euro dollar has hit the 61.8 fib. We talked about the 61.8 fib yesterday, and that the 118.75 could be a bouncing spot because there's a Fibonacci target and a Fibonacci retracement. So we'll discuss that again in just a second. But first of all, let's take a look at this calendar. Interest rate decisions on the CAD. So I'm not personally trading the CAD today, and otherwise lighter news throughout the day and medium news. Alrighty. So yesterday we talked about the fact that price could bounce at this level and that there was perhaps a short below that level. One of the reasons was if you fib the big candle here on the weekly chart, that is a target, therefore a bouncing spot. Take a look at big momentum candles. You often see if you put a fib on the big momentum candle, it will bounce at the minus 272. Modris is saying that there's bad sound. Does anyone else have that problem as well? Does anyone have good sound? Bob has good sound? Okay. I guess it could come with ups and downs, perhaps, throughout the webinar. So I hope that it will stay good. All right. Let me know if it improves. So the euro dollar typically, a big candle like that, typically you'll see a bounce at the minus 272 target. Also, we were looking at this 61.8 fib and saying that's a good confluence at 108.75. So that's what we're looking at for the bounce for upside. But I also said if that level breaks, there could be a good trade to the next target, which is the 78.6 fib and the 61.8 target, right in here at 107.25. right? That would have been the next target. So what happened yesterday? Well, let's take a look at the 4-hour chart. Yesterday, we were looking at this candle. If this candle closes bearish, a break of the low would be a trade, but I would also trail stop each candle high, because as you can see, right, in a momentum like this, candles keep pushing with higher, lower lows and lower highs. So even if someone took the trade, a trail stop would have limited the loss to just a few pips, and the loss is barely nothing, about break-even trade, just a bit less, obviously. So a trail stop like that helped protect against the turnaround. And in fact, if you see small candles like this build up after a a kind of quiet day yesterday, although it was bearish at the end, there is a chance that we can get that bounce, as we said, to the upside. So if someone took an early trade, perhaps to the upside, then that could have happened here on the euro dollar already, and you're already up a few pips based on that 108.75 level. If not, no problem. I still think there will be a hook back for more upside. So we'll discuss that idea in just a second. But basically, you can see how the short could have been protected against the turnaround for a small loss, and anyone who took the long is doing well now. Yesterday, I also talked about the 50-minute chart kind of bounce trade idea. From here, if 5 candles don't break it, you can see here, that was a 40-pip rally, by the way. Then we did get the rejection of the 4-hour candle, and we pushed down, would have been perhaps another trade. And now, as you can see, we had, if we use the same time factor rule, 1, 2, 3, 4, 5, 6 candles not breaking this bottom, and you get the rally after that. So the time factor is very important here, and we're getting the rally. So those were kind of ideas, counter trend long, and the potential short here, and now let's talk about today. To me, this is already starting to look like a momentum, and based if you look at the fact that there are strong Fibonacci levels where price turned, then I'm expecting follow through on that momentum. So I'm looking for dips for further rallies today, personally. And I think we'll get a retracement that could go, well, how far could it go? I don't know exactly, but I think that easily to the 110 level, let's say, for the moment. What I would do is personally let this go up as far as it wants, put a fib on it, and then look for the minus 618 target. So what seems likely at the moment is that price stops at the 23.6 fib here. Here, this fib, maybe at 109.44, rally up to 109.44, make a correction down to 109, for instance, 108.95, then bounce up to 109.90, 110, sorry, where there's a confluence between the minus 618 and the 38.2 fib. So this particular trade from here, from blue to blue, is, I think, probably going to be the most interesting for myself today. So that's, I think, what I will be looking for today. Really nothing else to add besides that for the moment. I mean, we could start speculating about, what happens after this, but I think it basically depends. I mean, it could be, depending on how, if it, let me say it this way, if it accelerates this level by far, if it does something like that, then definitely we'll expect a bull flag and further continuation. So it depends kind of how far this goes about whether more downside or upside is likely, I think. So that's, for the moment, I think the most important. All right, let's see. Can it be a daily wave 2 and we're at the bottom? It could be what I have now at the moment as an daily wave is this. for the moment, I have here an A, because this is a 5 wave, 1, 2, 3, 4, 5, finishing probably an A, and I have this as a zigzag ABC for part of a B, and now this could be again a 5 wave up for C. 61.8 fib is definitely something that is very typical for that. It's definitely possible. The alternative is that somehow this is already the start of the downtrend, which to me does not seem as likely at the moment. Why I think it's upside, basically two major things. There's a Fibonacci level here, which is typically a pretty heavy bouncing spot, plus a target. So there's support in here. We've also fallen quite a lot, although maybe not the strongest argument, without a retracement. Typically you do get retraces, but that's a bit secondary. More importantly, I would say, or just as important as the first point, is that we have divergence between these bottoms on the hourly. The 4-hour is turning up on the oscillator. We are breaking a trend line like this, and we are seeing some momentum on this chart. It is on the early side, perhaps, but those are all things contributing to the potential of a zigzag pattern like this. If you want to be a bit more safe, then you can, instead of taking the bounce here, you can let it bounce, draw a trend line connecting these tops, and wait for the break of the trend line and try to trade it somewhere where the orange arrow is. All right, so let this go as far as it up as far as it wants, let it correct, and then let it break this trend line and look for an entry somewhere upon the break. Alrighty. Pound dollar, and I'm curious, did anyone, because we talked about, I talked about pound dollar short and pound odd long and pound yen long and the euro dollar short, and I guess also indirectly about the long, right? It bounced at 61.8. We talked about the euro dollar. Did anyone take the pound dollar downside trade, or perhaps the pound yen or pound odd by any chance? Did anyone trade it? Bob took the pound dollar and pound yen. Great, great stuff. Just out of curiosity, did you manage to get some profit out of those? Orders took long today on scalping. Well, anyhow, not many apparently, but if you did, let me know. Okay, Beverly. It's always it's better to be cautious than too aggressive. So that's a good trade. No problems. But the trade did work out well. The entry that I was looking for was 154.20. It turned exactly to the pip at 154.20. And the target was 153.50, and it fell right to 153.50. Well, it actually went to 153.53. 3 pips off 153.50. So it was almost a perfect trade, because it went from exact number to exact number. So that I was very happy with that. I was hoping that perhaps someone gained some pips, and I see that Bob probably did. So that's good. I hope others perhaps do. But that was a good trade with that. Now myself, I aimed at 153.50, I think 2, and I missed the target, so I gained a bit less. I made like 30 pips instead of 70. So that was a bit my unfortunate that I kind of maybe aimed too tight. Could have probably aimed for 56 just to give more space. That's something I recommend to traders, and I failed to do that enough, I guess. I only gave 2 pips. I think I should have given a bit more space to it. Typically, try to, if you're aiming for 60, 70 pips, it's okay to give up 6. Anyhow, it was still profit, and the numbers worked very well, as you can see, from here down to here. Now, from a 4-hour chart, I was looking for a pretty good 4-hour candle. Thought that was a good 4-hour candle. So we got the retracement of that candle and the continuation. And now we're rounding up a bit. Right? Same like the euro dollar. We are getting kind of a potential zigzag correction. All right. So I think that the minus 272 target is just a pause, and we'll probably see the same pattern. Perhaps anywhere from the support level, anywhere from 153.84 or even these levels. That's what I would be expecting for the moment on the pound dollar. Now, let's take a look at the bigger picture quickly. Obviously, the daily is still bearish. So, contrary to the euro dollar, there's something a bit different on the pound dollar, is that is the fact that we are in a zigzag as well here that I said has the potential for minus 618 target. So I would consider shorts, not totally off the table for me personally, but I need to see a break of 153.50. I need to see a break of this target to know that there's space to the next target. So it is an interesting break or bounce spot. For the moment, I am leaning towards the bounce potential, but I'm not like oblivious or don't want to ignore the fact that it could still continue easily. But I want to see that confirmation here. Could the euro dollar have the same, because now that we looked at the pound dollar, could the euro dollar have a similar kind of fortune? So let's take a look at higher time frames, and we can see that we did have a strong daily candle yesterday. So perhaps the bounce at the 61.8 would just be a small one and not too big. But for me to be short, once again, I need the price to break through 108.60, and then I know that there's a good chance to go to the next target. So at the moment, I think that both euro and pound are bullish, or not bullish, but they have a lot of profit potential to the upside. For those that watched yesterday's webinar in the evening, at this case, I wouldn't say necessarily that the euro dollar is bullish, because obviously we've had strong daily down candles, right? Strong bearish trend here, actually. So if anything, we should be bearish, right? But at this moment, where's the most profit potential? It's to the upside. So despite the fact that this chart looks bearish, the potential is to the upside at this very moment. And if you look at how much money can be made, I think, to the upside, it outweighs the risk that is involved. So maybe this trade to the upside only works in 3 cases, but if we make good money on it, then there's more potential than to the downside, right? Because maybe there's a 70% chance to go lower, but it might only go a few pips lower. If it does break below the support levels, 108.60 or the what is it on the pound? I forgot. 153.44, then it kind of changes things, because then we have more potential to the downside. Then we have bigger spaces. Then we're talking about 120 pips to the downside, which offers a lot more than what we currently can expect, which is maybe 20 pips to the downside. before I think we're bumping into a bouncing spot. So that's the idea behind that. So an interesting zone, interesting spot right now. And that's basically how I see it. Bearish below these support levels, and good potential below these support levels. And I think here a counter trend risky upside potential, but with good profit potential. All right, so that's my idea on those. Pound yen, talked about that yesterday. Let this kind of move up and wait for the price to bounce at the fib or any of these fibs. The 38.2 is kind of shallow, so that might have been difficult, but the alternative would have been to take a break somewhere in here, slowly but surely pushing up. So that was not too bad. As you can see, price stopped at the minus 272 and then the minus 61.8 target. And last but not least, the pound odd. That was a bit easier because it made a deep retracement and went to target. So that was a good trade with 120 pips there. We talked about it. This is a momentum. Probably will get the zigzag due to the bigger uptrend at that point. When you have an uptrend and you see a momentum like that, we got a classical zigzag or 1, 2, 3. Some traders call it, to the upside. So those were good trades that went well as far as I remember. Don't remember anything else from yesterday. So let's talk about more today. And continue for the moment with dollar yen and Kiwi. Already. So we saw a very big break yesterday, and according to wave analysis that I do, that was definitely likely. This is probably a 1, 2, 3, and this is probably a wave 4. So we're now at a moment where price could be retracing, like making a bull flag, and we could continue with that dollar yen weakness. Sorry, the dollar yen strength, excuse me. So one way of trading it, I think, is perhaps even now. Actually, looks like we're trying to break through this trend line. Let me see. We got maybe it would be good for this particular 123.10 to break. It's the candle, the hourly high here, which is still dominating the current chart. This is an inside candle, so a break of that high doesn't mean that much. And I think that if we break this particular level, that this correction could already be over. In fact, it's already a decent correction. Any case, you can clearly see that we had momentum, correction. So it is a question of time, I guess, before we get that last push. Could be now or soon, perhaps. In that case, I think just the minus 272 target would be the conservative one, because this is the last push. We shouldn't expect a rally like this before what's possible, but at this point, a smaller push up seems more expectable, more likely. So an entry order could be at 123, I think 14. Let me take a look where I would put the stop loss. Would have to be below 122.50. Let's say 47. It's about 53 plus 14, 67. 67 and about a 67 target. It's about a 1-to-1. But that's not strange, because often enough This is when you get those last pushes, there's less kind of R2R situations because you're looking at a smaller target. Eventually, though, I think that the stop loss doesn't have to be below the 38.2 fib. For the moment, I would like to put it below this bottom and the 38.2 fib just in case, because the alternative could be still a bull flag continuation to the 38.2 fib and bounce. If it, however, after breaking, let's say it pushes through here and fails to break this level, then we could still get a bull flag like this. That's why I want to have that spacious stop loss. If, however, then it starts to break through 123.30, then I think I will move the stop loss immediately to this bottom right here and move it immediately to 122.70 and reduce the risk by 23 pips, which is, I guess, about 40% or so. So that would be immediate risk reduction as soon as it breaks this. So those are my thoughts on the dollar yen. I do still think that the upside is interesting. Now, of course, that's a bit contradictory to what I'm expecting on the euro dollar and pound dollar, for the moment at least, right? At this particular spot. But it could be yen weakness, for instance, that pushes this up. So we'll have to see how this configures, because of course in this case I'm looking for dollar strength, in the others I'm looking for dollar weakness. That does not have to necessarily mean that both that they will both not work out. They can both work out. Perhaps we get dollar strength later on, first dollar weakness. Perhaps yen strength, yen weakness will push it. Perhaps euro strength will push it. There are differences. It's not only the dollar pushing both, of course. So we'll have to see how that plays out. But these are my ideas so far. The Kiwi is also such a situation where this is a bit different than the euro dollar pound dollar. This is, again, I know it's going to sound contradictory, but this is actually a scenario where I'm more inclined to short than long, because in this case I don't see any 1 hour divergence. First of all, I see price at the oscillator return to the zero line, I see it hook back to the 34 band here. So we are seeing the Kiwi now falling. So this is something that, if a bit more aggressive, perhaps entry could have been even upon this trendline break. And in that case, the trade is right now, and we'll have to see how far it rides. It could definitely do the same as the euro, I'm not saying, and make that zigzag. But with the Kiwi, it seems less prominently present, this particular formation at the moment. It too has reached the -272 target of this fib. Let me check this fib here. And this fib. So it could be a bouncing spot too. So in that regard, the 5-minute breakout trade is a risky one here, because it too could face the same dilemma as the euro. When it moves here, is this ultimately the break or bounce spot? Do we get the zigzag rally, or do we get a fall, small rise, and fall again? That is how I look at it. Alrighty. Anyhow, that's why I wanted to take a look at these two, because this is what I was looking at this morning. I was looking at the potential turnaround here, looking at this kind of rising wedge pattern as well, and no divergence on the hourly, and this kind of smaller correction. So that's what I wanted to show you. Let's take a look at pound yen, and then I'll take a look at the strategy of today. I don't want to wait too long for that either. All right. Let's see. Pound yen, certainly an uptrend, right? Looking at the moving averages here too. We really have to zoom into a 15-minute chart to find anything near price, I mean, we have to zoom into a 50-minute chart to see price close to a moving average. That's how much of a trend to the upside there is at the moment. So is this a good breakout trade right here? If this 50-minute candle closes above the 34 band, is that a trade? I think yes. I think yes. I think it's a long and maybe with the trail below these hourly lows. We're kind of slowly but surely building a base here. I don't see why any of those lows should be broken. If they do, I don't think it's worth staying in that trade. So that could be a good trail on the hourly using those lows. Let me take a look at the 5-minute chart here. Yeah, I would think that's a good trade. Let me take a look at the Camarilla and pivot points. Alrighty. The other way, when you're looking at Camarilla, of course, is a break above H3 with probably a stop loss below this bottom right in here. Looking at moving averages, the break would be already if this candle closes above the moving average here. Let me take a look at pivot points. There's a bit not so good news for a breakout above 189.80 because we're slamming in right 190. So I wouldn't take the breakout. Scratch that. I wouldn't take this H3 breakout personally because it's right pumping into 190. Yeah, that makes the pound yen a bit less desirable. When you look at support resistance, it is bumping into a 190 level right here. Plus, it's a monthly R2. It's a weekly R1. It's a daily R1. It's a top. Yeah, unfortunately, it seems it seems interesting how it's set up. It seems solid when you look at the moving averages and how price is building up. That is a bit annoying. It still could be worth a long when the price here posts something at 189.64. Then there's still 35 pips until we reach 190. But I wouldn't take the H3 breakout though. All right, euro yen. That looks bullish too because why? Because we had a pretty strong momentum yesterday. So I would expect that momentum to continue today. And it looks like we had a 61.8 bounce, so it looks like we could be building up to the minus 618 target at 135.28. Also looks like we finished this zigzag, and now we're going to make a new zigzag, perhaps, or even move higher. I don't know. We'll see. Depends how price responds to this level right here. Alrighty. Let me make a quick measurement here. First target is 135 though, by the way. 135. It's around number 2. So the euro yen looks to have a bit more space than the pound yen. Let's see. When looking at the hourly, even a long right now, with the stop loss below this candle low, our candle low, sorry. Should be okay. About 30 pips risk. But we see definitely something like, I don't know, maybe, 70, 60 pips potential there. Of course, if it makes a bit of retracement deeper to 134.10, that's great. That's just a bonus. When you look at these hourly candles, you see the higher lows, excuse me. So I would expect that to continue as this pushes up. So euro yen to the up, that target looks good to me. And I would trail stop most of these candle lows. Hourly candle looks best set up for that at the moment, for trail stop. Alrighty, folks, let me go over the strategy here that I want to show you today. Sorry if the sound is bad. I have had some internet problems this week, but we'll get someone to look at it today. So hopefully by next week, it should be solved. All right. So the strategy I want to show you is, first of all, is available for free. And you can always send an email here to get that for free. 1 second. To that email address. You can also go to elitecurrency.com and you can fill out, there's a free trading strategy. You can find out my FX gift and then go to Forex trading strategy, and there is a PDF document and an email captures thing. You can write there your name and email and you would get that for free. All right. Now, the idea is actually a very short-term strategy, and it's we would have to go to the 1-minute chart here. It have to be a script would have to be added by doing this. We will make this 2 and 2. We'll click on OK. Then I need to get the data by going to Open Offline Chart. Then I have to find the one that I need. That's this one, M2, because I had a 2-bar. I open it, and then I apply the template. And we have this. These are range bars, basically. Range bars here, as you see. All right, and the idea is to cut out time noise, let's say, by looking at these bars. They're pretty small bars. And we have at the bottom a MACD alert. So the idea is basically to look for dips within a trend and then to look for kind of the early turnaround signal. right? So now we don't have a signal at this moment, so I'll have to look at the past just to give you an idea how that would work. Basically, let's see, here with the euro dollar, for instance, we're looking for the moving averages to be aligned to one direction. So if the blue one is below the red, we're in a downtrend. If the blue one is above the red, we're in an uptrend. So in this case here, for instance, right, we have the blue above the red. Could be an early one because preferably we have some distance between these two, otherwise it could be a bit iffy. There's no distance here, so it's on the early side. All right, so but in any case, price is moves above it, moves back to it, so that's potentially a bouncing spot from our upside. The signal will be when this green line, when this line turns green, basically. So somewhere around here. Let me go back to that spot. Somewhere around here, as you can see, would be the long. The stop loss is below a bottom, probably 108.70-ish, long about 82. I don't know, it's somewhere between 9 and 15 pip stop loss, as you can see. And the target is loose, but you can see that at an entry like that, it is easy to get it. It's easy to get a 1-to-1. Let's say the stop loss is 12 pips, so when it rises here, it went up 33 pips. So you can see that there was a potential of 2-to-1 even. We could maybe perhaps use fibs in this case, something like that, and I don't know, aim for one of these targets like the minus 61.8. In that case, it would have been a 20 pip win, right? So not maybe a lot of pips, but a good R2R. Obviously also not a bad number of pips if you consider the fact that it's such a small time frame as well, right? So that's just basically the idea. So here, for instance, we have moving averages aligned, right? Price going back to the moving average, but we don't have a cross here yet, so this is not an entry. We do get an entry somewhere here, either on this bar or this bar here, as you can see, with the stop loss below here. And we can again, I guess, use a fib like this for the target. We didn't reach the minus 618 target, but to be honest, if we top out here, I would definitely at least use a trail or something like that. So if we use a trail, then about 12 pips, right? Compared to maybe 8 as a risk. In any case, maybe we can use different fibs. And anyhow, fibs, you can use fibs like this to look for targets, for instance. Okay, that's the point. Shorts would be the opposite, when the red one is below the blue one. Let's take a look at the past here. Yesterday must have been some short available throughout the day. Let me go back to yesterday, the beginning of yesterday. All right, roughly in here. We're downtrend, right? And we're looking for price to retrace and then turn around. So that could have been, here could have been a short, for instance. This would have been a tight one. I'm not sure. It broke by 0.8 pip or something like that. So depending on how tight the stop loss would have been here, it could have been a loss. If just a tad, if you use like a 1 or 2 pip margin, it could have been survivable. Otherwise, a new entry would have been here, and that would have done a lot better. Another entry here, right? We're looking, one thing also, not only does it have to turn, but it has to go back to the 0 line. So it has to go back to the 0 line and then turn. That's the entry. So one short was here, right? Here, 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 basically, and here. Those were short potentials already in the first hour, I guess, of the European session, right? Let's see. This was a short, but that would have been a loss. That was the moment where we had basically a consolidation, and I was scared that we could get that rally. Remember, I was actually saying that after 5-minute, 15-minute bars, we could see that push up. That's what happened. But from this strategy point of view, this could have been a short, actually, a losing short, though. Obviously, that's going to happen. Let's see. Here, this is no uptrend, right? This is no longs because the moving average is below, the blue is below the red. Let's see. We need price to be below the zero line a bit. So I would say that this could already qualify a bit. Perhaps some short here or here on the early side. Potential iffy, but possible. Let's see here. Here we have a turnaround. And here. Those two trades would not be losses. Might not be big winners, though, too. This is not a short anymore because the moving averages are not aligned, right? So if anything, we're looking for potential longs or early longs because they're just aligned. This already is an established long right here because you got good distance between the moving averages. And you get an intraday push for 20 pips, right? Anyhow, this is about 6 hours later, so you had a couple of trades in the meantime. There is just, because you're looking, this is not 2-minute chart, it's a two range bar. Now, I'm not definitely not an expert on range bars and Renko bars, but this strategy is, I think, pretty relatively straightforward, so I don't mind using it. My experience with this is not very vast, but what I've seen so far is definitely interesting. So, but anyhow, this is a strategy that you might want to, perhaps you find interesting if you like short terms trading, that could pique your interest. That basically the goal of this strategy session to not only analyze, but sometimes talk about strategy. So this is a strategy, and definitely short term, and certainly does offer a lot of opportunity in a day. Now, if we continue that day, we will probably see more opportunities arise. All right, anyhow, back to today. What we're looking at now, well, the blue one and the red one are equal to each other. So we're actually at the moment, it's kind of neutral, right? We don't have anything at this point, but we do see the potential for the euro dollar to, if it makes a spike up here, the blue one will be pulled away, and if we make a retracement and then bounce, that could be a long setup. As you can see on this two range bar, we already had a tremendous uptrend effect, right, on the smaller time frame. You initiate kind of the template on the 1-minute chart, but it is not a 1-minute chart, but that's how you access the template. This is a strategy, by the way, from Nenet. I forgot to mention that. And anything else that I need to mention? I don't think so. This is basically it. This is, of course, be careful at the beginning. Try it on a demo, etc. Test it before, jumping too heavily in it. But if you like short-term trading, I think this could be interesting for you. Let's take a look at a different pair. What pair could be good? The pound yen maybe could be interesting, I think, because we're up, or no, the euro yen. The euro yen even better maybe. Let's take a look at that euro yen. So let me go to the 1-minute chart. Let me just make it blank. That's not necessarily needed, but let's put on the script. I'll make it 2. Click OK. Go to open offline. Then I scroll down to Euro Yen. I look for M2. I click on open. Then I put the template on. And that's it. Now, I'm already in the long. That's based on a different strategy, right? And so don't look at that for the moment. That's something I was doing earlier. But looking at this, basically, do we have some setup here on the Euro Yen? Well, the moving averages are aligned to the upside. The blue one is above the red one, right? And we had a move back to the 0 line and a turn here. That was a long. That didn't go too far. Let's see. Anything else? Let me double check something. Hang on. Okay, never mind. Another longs would have been here. There were quite a few, and here too, and that long would still be open. As you can see, a small break here of this bottom, about 2 pips. So, I mean, you might want to move a bit of, I don't know, maybe some few pips away from a bottom like that to give it some space, or even if you move 2 bottoms away, like this is the first bottom, and go to the second bottom. You don't want to go, I wouldn't say that you want to go into the 30 or 50 or 30 or 40 pip stop loss zone, but if a long is here and a stop loss of 10 pips, for instance, is nothing too big, right? Obviously, if you put it right below the bottom, you could even shave it down to 6 pips. But I think something like, on average, probably 10 to 15 is typically more in balance, I would say, for this strategy, as far as my experience has gone. But Ned knows a lot more about it than I do. So if you have any questions, it probably would be better to send him an email. But this is my experience. I would say that underneath 10 is getting a bit on the tighter side of the stop loss. I think 10 to 15 is probably a bit more balanced. So if you see a bottom, but that is only 5 pips away, then it could be a bit risky to put the stop loss there. So this Euro Yen is still in the long, basically, right? The trade is still open, as far as I'm concerned, when looking at the strategy. Now it's retracing down. Was there another long earlier today? Yes, here and here. The second one especially was a good one for this strategy, right? 20, 25 pips to the upside at the moment. Any questions that you have, perhaps? Anything that pops in mind that you would like to ask? Here the idea is, once again, the blue below the red, so we're in a downtrend. To give you a downside example, price retraces here to the 0 line, then the signal is when this turns red in this case, and you got 1, 2 shorts, about the same spot though. Even a short here, that's a loss, but this short is a win. Another short here. So you got a lot of opportunity. You might want to be even so many opportunities that you might want to be careful with trading necessarily all of them, because obviously, some are going to be wins, some are going to be losses. But if you, I think personally, kind of filter out maybe the ones that make more sense when there's enough volatility, when there's no news event around the corner, or when technically there's a good reason to look for a trade when looking at the 4-hour chart, then this is a good entry method. It could be a standalone strategy too, where you basically take multiple of these entries throughout the day. But then you're going to have, of course, you're going to bump into wins, losses, win, losses, win, losses, and then you have to be careful with the management that you win enough on the wins to compensate the losses. All right, great. I have some questions. So we set the range to 2. Yeah, indeed, that takes care of it itself. What you indeed only have to do is, when you put on the range like this, change the bars range to 2, and that's it. That's all you need to do. The rest takes care of itself. Plus, you have to start at the 1-minute chart. You need to go down to the 1-minute chart and then put on the script. All right. Let's see. Pierre Luigi connected a bit later. May you tell me which moving averages you use? Well, these are not the typical moving averages I use. These are moving averages for this particular strategy. I don't use these ones, these specific ones, but I'll tell you which ones these are. These are 40 EMA and 120 EMA. I use different moving averages. I use typically 21 EMAs and 21 and 144. We can look at the pound dollar indeed. Indeed, let's do that. Yeah, this is definitely a strategy that is only doable on pairs with low spreads indeed. I mean, if you have a pair that has anything more than, I don't know, I guess anything more than 3 would definitely be already not so optimal. Preferably below 2, I would say. Otherwise, the costs are eating at the profit indeed. So euro dollar is good, pound dollar is good, right? Any of those that have a bit lower spread. Let's see, Beverly, you could add it as confirmation to trades you were already looking at, right? Yes, yeah, you can basically do your kind of analysis and look at the charts and kind of choose a few pairs that seem the most interesting, and then use this as a potential trading method indeed, after you've kind of narrowed the list of interest. So let's do it again on the pound dollar. We'll make it 2, put on the script, go to the 1-minute chart first of all, then put on the script. Then go to File, then we'll open the offline data here, go to Pound USD, find M2, which is here. Open, and then add the template. Now, one thing I need to tell you is that when you close MT4 and reopen it, you would have to do it again. This is not something that is automatically stays on your chart. That is the only kind of disadvantage, but I mean, it doesn't take all too much time either to do it. But yeah, that is something we need to do. Pound. Well, we can see that the pound, was making that rally to the upside this morning. Earlier here, you can see that pretty well on this range chart, but also made a pretty heavy retracement here. So at the moment, it's kind of a mixture, isn't it? It's flat, but the blue one is a bit above a red. So from that point of view, if this turns green, it could be an early kind of type of long. But it's a risky one, because look at this. Here it turned red after a pretty strong downside, and it moved up, right? So obviously it's not a perfect strategy. Obviously there are going to be moments like that. And this was not a retracement. One of the reasons is that this is not an established moving average yet. There's not an established trend. It's on the early side. Those early side kind of trades always have that tide of risk involved, that there's not a clear momentum or flow established as yet. If you look at this chart, you obviously see why, because we had a strong upside as well. So this downside pulled the moving averages to bearish, but this was still a factor as well, the upside. So we're having maybe this. So at this moment, I would think that it could be better to wait. Angle could definitely be a good thing to look at. Yeah, definitely. I mentioned space, but the angle itself is also important. For instance, both. You can see clearly with the bullish angle here, right? That was a good one. Cheers, Bob. See you next week. Good trading in the meantime. So angle definitely is something to look at. Now the angle is flat, so it's not too encouraging. Now sometimes, of course, even flat moving averages, we get a good break like here. But here, obviously, they're all intertwined and flat. That's a range. And yeah, it was Asian session, so this is not a typical scenario where you want to trade the pound dollar as a breakout. Yeah, DAX, I wasn't able to make it work. I can try to try it again. I would be interested in seeing DAX too with this strategy. I didn't manage to get that, but let's try it again. Well, if it doesn't work now, just remind me. I'll try it though. Maybe it works. Maybe I did it wrong. Let me go to the 1 minute chart. Oh, it's the wrong one. Here. Cheers, Ilya. Good trading. Alrighty. This is it. And it looks strange to me. Now I know that the DAX does trend very nicely, but this seems a bit exaggerated to me. So something is not adding up here. I have the same problem. So I asked Nenad actually if he can make it work today by coincidence. Let me see if he answered. I'll take a look in the meantime. But yeah, this something doesn't add up. I mean, this doesn't look correct somehow, right? But it will be interesting to see how DAX reacts with this strategy. Oh, okay. So then it says try 25. So let me do that. Let me get rid of this again. Probably too fast indeed for 2. Let's leave 25. Okay. So, or let me 1 second. Strange. Or let me open a new DAX otherwise. Strange. That 25 doesn't seem to change anything, fortunately. One more last attempt. Oh wait, maybe I took the wrong data. Yeah. No. Something is not adding up. I'll have to figure it out together with Nennet. Maybe he knows more. Let's see. Let's take a look next week again, okay? Pound dollar. Let me take a look at the pound dollar. There was some message actually on a different screen that I didn't see. Maybe that's why the DAX didn't work. I have two screens here on this PC and popped up on the other one. Didn't notice that. Oh yeah. 1 hour chart, indeed, we got a good 1 hour candle. Last hour, as I said, the euro yen still pushing up. At the moment, let's take a look at the dollar yen quickly and the pound dollar, dollar yen. Just missed the 14. Was very close though. Very, very close. But the euro yen is pushing okayish. Let's see. It shouldn't be any worry at the moment. Anyhow, I would be trail stopping every candle low, so this trade should be out of risk quickly. That's the beauty if you use trail stops this tight, especially if you catch the momentum right at the good turning spot. The pound yen, talked about the fact that we could get a bouncing spot around indeed anywhere of this level. It seems like we are getting that. Euro dollar, not that much. We're just getting a smaller retracement. So still expecting that same story, still expecting the zigzags here unless we break those bottoms. Basically, that's the main idea. All right, folks, that's it from my side. Let me share with you one more thing. Any questions, perhaps? Next week, we have new webinars again. Monday, Nana's going to take a look at recap. Tonight, Nana's going to take a look, by the way, at writing with Bollinger. Monday, again, the weekly FX recap. And then we got the new schedule with Tuesday, Fibonacci. Wednesday, we can take a look at this strategy again. Wednesday evening, Heikin-Nashi price action. And then, let's Let's see, I think we're missing some webinar. In fact, that's missing. The educational webinar is missing. All right, we'll get that fixed. But anyway, that's the lineup for next week. Yeah, if you have any questions, by all means, just send an email to me or Nenet or Elite Currency. And I or Nenet will get back to you. And in the meantime, good trading. Yeah, basically, indeed, long on the zigzags, unless, of course, those bottoms break. That's what I'm looking at. And wish you good trading, and see you all next week. All right, cheers.